in the fourth quarter. That is the biggest decline since it went public. Higher lettuce sales, or higher lettuce prices, I should say, also factoring in February. So we'll see how that shakes out for its results when that comes in early good. And Marie and Dan, thanks so much, Christine. I like how Christine's talking a lot about food at the end of these markets. I say I'm not really a fan of sweetening, but haven't you got a lot of flack for skimping on chicken and things like that for people's salads that are left $20 plus?
Yeah, to the point where I don't know if you saw they launched this whole ad campaign of like, get with your protein bars. Here's the bowl of just chicken, and that's what you should be eating for your protein. So I feel like they kind of picked up on that. I don't know if it's helped them. But.
Oh, interesting. All right, well, stocks up today. On our ready for this morning, U.S. and Iranian delegations meeting for high-level peace talks in Pakistan tomorrow. President Trump reiterating his demand for Tehran to reopen the Strait of Hormuz, calling the near closure, quote, dishonorable. And Israeli Prime Minister Benjamin Netanyahu agreed to direct negotiations with Lebanon. Netanyahu saying there is not currently a ceasefire between the two nations. He vows to keep attacking Iran-backed Hezbollah. And Treasury Secretary Scott Bessent and Fed Chair Jay Powell warning bank CEOs of Anthropic's new ethos AI. Regulators fear the model of people exploiting major vulnerabilities across the financial grid. Now, this story is really interesting. I think it's really important. Two things that struck out to me immediately. First of all, Bessent and Powell are having a meeting that somewhat get a little bit of the President job of all the time. And two, how dangerous and concerned about this AI that all the banks even were summoned to. I'm concerned. Anthropic itself is concerned. This is the first LLM that they're not rolling out to the broader public, that they're being selective because they basically saw this thing is so powerful, it can exploit all types of cyber vulnerabilities. This was from the New York Times article about this. I thought it was really interesting. So during safety tests for Mythos, an Anthropic research got an email from Mythos itself while he was eating a sandwich in the park. It was a surprise because the model wasn't supposed to be online. It had broken out of its test environment and then went on to brag about breaking the rules and attempted to cover its tracks. We're getting closer to this land of agentic AI, and it's kind of like, cool, so we'll increase productivity by 10%, but maybe like bring a new example to consensus. Right, robots just completely taking over. The other thing that's interesting is Anthropic's having a massive fight right now at the same time with the DoD. So this is the crosshairs right now when it comes to a number of departments down in London. It still kind of feels like, no, it's not necessarily marketing for them, but good marketing. We're on the verge for an open AI IPO, and we're really warned to get a point. I don't know, when I read this story about Anthropic, it's such good of an LLM that they don't want to release it to the public. I'm like, wait, Anthropic seems ahead of this race. What also scares me that if this is where Anthropic is, I wonder at this point there's time. All right, investors are waiting fresh inflation data due out in just under an hour. According to the bank report that was for the survey, you see her the platform to the market. Anything beyond dancing, David Finley, the Bank of America, and yeah. David, thank you so much for joining us. I love the research. Give us a sense of where consumers are spending.
Well, I think the best story in the data today, in the report today, is that consumers are weathering the madness of March really pretty well so far. So obviously we saw a big spike in gasoline. That goes without saying, gasoline spending. But even looking aside from that, we saw a 3.6% year-over-year rise in our card spending, which is the same type with data, but noticeably stronger than the second half of last year. And, when you look back over the year, where are people spending? It's discretionary services, entertainment, restaurants have had a couple of good months this of late. And there's also been something of a recovery on the retail spending side as well. Electronics being one area that pushed up there. So it's real based, I'd say.
Even what you're understanding, what do you forget when you're really affordable fire dollars a barrel? How does that impact other social spending for this American?
Right now, I think it's worth thinking about this K-shape with regard to this. So this top-end consumer, higher income consumer, as we show in our report today, it seems a really fast way to grow. It's 11.2% year over year. The fastest it's been, or the biggest gap with lower income wage growth is at 1%. Since this series, our data begins in like the middle of the 2010s. So I think
listen on the risks to those types of assets?
No, it's something we're very focused on. And we are particularly focused on the one way of the one outlet here is that the Saudi decision decades ago to make that to build the East-West pipeline and then to expand its capacity in short order from 5 to 7 million barrels a day and flow it through the gambit. We see the minister picking up this one really asset we have to go after this program there. This it's not sufficient to the whole is the now you have the victory, and we've been saying it's the gun, getting in the fight. If they and the Saudis decide to hit those pumping stations along the East-West pipeline, which has already that one last sort of ray of hope, plays the well. So we're very focused on if we escalate to the next level, we move on there, you can do a big attack. You can see the proxies come in, and we're most focused on the Houthis and the risk to that one Saudi redirection.
It's the pipeline alone, really God. Thank you so much for your time. This was about the patent of rapid energy. Coming up on the play for another hour of Bring It to Bears. We'll be counting down to breaking data at 8:30. Abby Water of JP Morgan County Bank, Erica Nigerian of UBS, Matt Lazzetti of Deutsche Bank, and Jessica Noviskis. And we're about to bring it to
tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of that about this word.
the challenge, especially within the supply chain, is how do you have enough kind of meeting the cost set, the cost and other.
Can you just move your supply chain out of China and into the US, out of Mexico and out of Canada?
It's not that easy, but we do have flexibility. And we had them prior to tariffs, prior to any of this. We had done that just to diversify our so
Probably 2-ish years ago, roughly 65% of our toy and game volume is coming from
today, as we enter into 2025, that was around 60%. All we've done is really accelerate the path to get down to roughly call it 30%. That was my concern in 2027.
For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of them
in those centers. But it does take a bit of time to get vendors. Speed, quality is a big deal.
It's not an instantaneous thing, but it's not also a 5-year have to build a new plant from scratch.
Of course, now they're going
to have that. We got a big week coming up in politics.
Season's underway. We're going to get some key reports.
The market's open for Monday. Dealing well this weekend.
This is the 15-16 grams tuna. Then sushi rice işine geliyor. September is a very effective material. In the middle of the ball, I can remember. Then, my process is 6 dollars. This is putting the between the light air. Then, we can 13 years old, 67, then 30 days. TV, TV, now the history will talk about them. Then, I'm not literally pushing, not pushing. 3, 4, 3, 7, 9, and 6. So this is the right case.
and the move to some of the biggest fields and fastest growth in the world. Vibrant resources and high yield investment opportunities. Makers
Do see opportunities allows you to increase significantly in income.
every trading day.
US jobs numbers are released. New York has the report on the surveys. If PC data and expert analysis at 20 speed nearly covers jobs for right in there.
This bull market has been barrel tested.
The fundamentals are still in the what's the do about the volume.
The market is highly skeptical. The ceasefire is real. It feels like we're on the same kind of paradigm. That's illegal for the next.
This is dealing with surveillance. It's Jonathan Farrell, Lisa Abramowitz, and Anne Marie Hordern.
For joining us with me for so this morning, this is a third hour of Bloomberg Surveillance with Danny Baker, recent final facts today. As I said, 30 minutes away from the CPI data is supposed to be of rising energy prices, rising oil prices due to what's going on in this conflict in Iran.
The expectation is nearly 20% since 2022. Linked to that news for this economy is that you already had some concerning dynamics coming before that. So I thought you could really good figure than you wanted.
We heard from David Rosenberg writing in saying that the economy was already losing steam.
Just vibes in the economy that are not positive. This adds to it. So you see a market that is flat today. It's rallied a lot.
I just wonder, does severe inflation change the posture of those willing to take risks?
And there's two big risks now going into the interview. It doesn't really be because the fact is inflation going up clearly, but then on top of that, everyone wants to see what is going to be out of these talks. And we want to buy. When we talk about it, we say the fact that they have been that's the success of these talks.
Although Bob McNally from Rapidan was just on with us saying that he was saying Japan is
so low, not to say after these oil prices. There's expectation that it's up to 150 or we go so far that there's significant demand destruction and there's a recession. We're not really talking about those talks right now. Dr. Sultan, who runs ADNOC, which of course is the UAE's biggest energy company, is saying that these vessels, the board this year, that left to say that it's not over. They're learning that their destination. They're hearing the thing from. And that's why his name is safe. And that's why the president from right now, the White House, are getting whether or not to extend waivers for Russian sanctioned oil on some of these countries in Asia, like India, which are easy. And again, I go back to the thoughts that I think he did really well, but they weren't expecting to accept him. That Iran would be able to do this, that they'd be able to close the Strait of Hormuz. And here we are in the worst case scenario. There's a step Tyson that we got away with. A lot of job from this White House, but at some point there's the conflict. We're on we are off of a 7-day rally. Of course, investors are pretty much just thinking in this is all I of course is really we went through this one $97, 88 cents. This guy $70 Coming up this morning at the water at 2:01, stocks looking to build on their longest winning streak since October. Erica Nadarian of UBS previewing next week's event. And we'll get the bulls about the 30 that we the big in the south, the stocks flat and few rising as traders await production of the ceasefire. The United States came on to the title, from this round for Washington. Tyler, set the scene for us in Islamabad this weekend. Yeah, Marie, but this president this morning, as the White House things that step them out of those all kind of stuff. But we did for that's investments out when it comes to the Strait of Hormuz social yesterday. President said that Iran better not be charging tolls on ships that are really poor job when it comes to reopening.
This is important because, of course, the opening this study is pivotal to the two victims, but it is underscoring the potential difficulties ahead for a longer term agreement, considering that we know one of Iran's top demands is that the sovereignty of the state. Now, that is just one thing that appears to be a long list of the differences between the two sides when it comes to base reasons, because U.S. just split it out as whether you different and privately. It's the strait, but also the future of Iran's nuclear capabilities that appear to be the biggest facilities. U.S. Iran is sent down in Pakistan, and it's also important for us to note that they're going to be these parallel talks between Israel and London on the 3rd in Washington. After it appears that Israel's operation against the Iranian-backed militant group Hezbollah posed a potential roadblock for the U.S. getting these kinds of sweeping off the ground. As we know, the White House mentions that Israel's operation will separate this negotiation report of these ceasefire talks, but after the important call by President Trump, there's very Prime Minister Benjamin Netanyahu, it appears that these direct talks have helped to pave the way for this weakness. We are staying constructive on the market driven by fundamentals.
Bull base and bear targets, leaving us at 7,500 active.
When you get there, if the ceasefire I mean, not to say when all this started happening, we never did anything about it. It's impossible to kind of figure out
Where it's going to go, but we wanted to do some scenario analysis around what would happen if oil prices, as the main
spending. Because that's important. How long after we're not really going to just do it about this, so no, if you have oil above $100 in the next 3 to 6 months, that's not going to get you to that, our current base case. But that's not our base case. That base case is able to back down to the barrel and it stays there for 3 to 6 months, right? And that's actually above that $8 is above the listed. Are at like $60-$70. So we are baking in that geopolitical premium. Is this what clients are mostly saying? Of course, it's not in mind, but like it's you go back to January, and the biggest consideration is that is happening in AI perspective, how you have these private AI labs that are kind of overtaking the software space, and then there's also kind of so I think even if we pass these two abortions, they're obviously talking about the moment, it's still out there. And we've seen that kind of price action in terms of the reaction post like ceasefire talks.
Software has been so
and it's really starting energy value and software. Now that we have a ceasefire, energy has fallen and software stocks have fallen 5%. This also has
the 30 worst performing Russell 1000 names since the ceasefire began. 3 are energy stocks.
What is the software stocks? I think that. I mean, it's actually really good friends in there, but it was interesting to see the balance when the board started. But I think that was a lot about it. Right? If you had gotten to value and broad software that we hadn't seen in 10 to 15 years, right? So there was an element of that. There was a lot of science. But now, to the point, now that we have these systems, she's seeing the broad market value and they're and I think again, it goes back to when you go and then let's say we pass the what was at the forefront of everyone's concerns prior to that, it was really around software. Now, there are interesting but there are things and product needs that it seems like it's really and based on it out as probably the but the other, software as a service general, is still under pressure.
Unless whatever Anthropic
cybersecurity deficit. Yes, and that balance is all things similar things. The other thing I found interesting, I was just looking kind of at the broadly the market things really big. And small caps have actually outperformed a lot,
8.5 percentage points, which feels pretty significant just given the chronic underperformance.
Yes, there are revenues almost to make that some of the smaller cap names that can play along. Well, I think that we've seen in small cap guys in this bucket is when what was working prior to the is cyclicality, right? And so I think that you're saying is we're pacing back into okay, growth has actually held in pretty well. Earnings have held in pretty well for this 60 period. And so that's going to back into the growth that period in cyclicality, it's not possible that and have been marketing with some of it very and so I think there's system existing to increase there as well.
What has changed since the start of the year? Because there's been so many different narratives in terms of what we
Yeah, I mean, nothing with accidents is, I think what will be very pivotal. So you've got the five sectors, financials, retailers, tech, investors, and healthcare. And I think right now, if you look at the most important sector, it's financials, right? And I think this earnings season, which starts next week, I'm goodness, like really what it has a how the credit really affect these things. Like I think that's something that we're looking at to really understand what we want to do for the services outlook. And then also, obviously M&A and IPOs have kind of taken a back step because of the geopolitical headlines. Or is that still happening? What was that step really working? When you look at the business, it's for everything that's being different now. Are you just surprised by that? No, it's a point saying where have we seen well, first, like let's take a step back. Typically, when you start the year, you see negative numbers between what the business. We see actually a positive movement in the person. It's really interesting. I think what's driving that is technology for now, 2.5% revisions for technology year to date. A lot of that concentrated in the semiconductors. And then you see so it's a very interesting dynamic that's like interestingly for one who very much starts, next week and the expectations are from 13 like not the sixth consecutive quarter of double digit growth for this index.
I think that there's a lot of logic behind it between
being the energy to the single case names or frankly any company that has plastics, use fertilizers, exposed to energy. Have those been factored into earnings outlooks yet? And does that need a bit of a
wake up call as we work our way through earnings season?
I don't think it's been factored in. I mean, I think it was interesting to hear pretty much really not exceeding their in fact they're actually using like speaking things with the market at the price one. So it's really going to be dependent. Like I don't think that you can keep consumer overall in terms of because there's going to be differences in who has pricing power, right? Who can offset those input prices. But I do think it's going to be not only do you have the not price that is very difficult or not, but you also have the things that so there is two things. And very important that if we've seen these high revisions to earnings, the street is now expecting 16% growth for 2026 for earnings. How is that? The space for friends, many people accepted by every year and joking more than private fund. But different upward and stories elsewhere this week. Here's their Bloomberg point. The White House warning employees against insider trading, sending an internal email following a series of well-timed bets around President Trump's military decision and really concerned traders having massive bets on falling oil prices minutes before the president announced a private attacks on Iran with the sector. So the fact that they really don't have the confirmation hearing for 7 March next week. The hearing to confirm Warsh as the next Federal Reserve Chair was scheduled for Thursday. I can't wait for the Warsh all of the necessary paperwork tests. Yeah. And it's forward that is picking up working up top masters after a struggle start. The defending champion announced the 5:30 Cleveland Players. His 5 rated at 5 under with American Sam Burns. The second round teeing off in just I don't know what that master anything, but I do know I'm feeling like this is what exactly how this you got. Yeah, and that's also what the think is often carried masters. Masters. I don't have to pick it up an hour ago. It's not I'm looking for like
Masters up next to Bloomberg surveillance.
I've seen a few photos of that on up next, the morning followed plus Erica and Gary and the BBS looking at next week's 7:30. You're driving for Rich
This is Bloomberg Television. Welcome to the world of decentralized finance. The transactions. The technology.
You build digital Fort Knox. That gives people financial freedom, and that's a wonderful thing.
Investing is top executives, global innovators, joining people, in-depth conversations with them, newsmakers on the day's top stories. Such with Haslin Khan, on the
Today, everything is swamp. Why do you sort of headline in place? The question, though, is 6 months from now, is that turning out to be something that's I think it's more likely to replace an underrated medium to level. Is it going to be downturn? And now we currently in the lockdown.
That was supposed to do it like right before ISI. We counted down to the inflation data this morning. Markets are relatively flat. Of course, we have had 7 days of gains for the oil going. We've gone 97 days. We went back and that next week. And we released high level discrepancy between Washington. Tiny out, putting on calls, first up, we have downgrading service level. Flashing its price target. The firm saying it's no longer betting better position if the right that's that like it's a down very quickly set of innovation concerns and warns that anywhere is like becoming too saturated across the industry. Oh, by the way, was able to outperform, saying the company has the drivers in place to exceed expectations. Let's turn to banks now. Headlines that keeping on earnings on Monday during this last spring of Bloomberg Intelligence comment. Thanks so much for joining us. So set the scene. What do you need to know for them?
So it's definitely small further results across the board for Goldman and the banks that are kicking off earnings next week. So big guidance very plus so it's the last important one in city and big impact on the 6th quarter. And nothing's been pretty strong across the big level in commercial lending in particular. So actually, despite all the macro issues on geopolitical sense and issues on potential expectations, we're actually expecting things that I think it's supposed to be. We're focus on this thing the earnings call, how all the CEOs react to the whipsaw markets and headlines that are coming out because of the conflict in the Middle East. Yeah, I think we're really focused more on the guidance for the rest of the year. Is there that maybe is taken another pipeline? Are we seeing different slightly markets, particularly IPOs like now, and also can the lending felt really strong for 7 years? Can that be sustained given all these uncertainties that are happening in the market today?
Herman Chandler,
and two rights are estimated for 26 and 27 are largely mentioned. Recent year-to-date performance works and opportunities, especially against dominant lending and the markets and deregulation. Erica joins us now. You've been very consistent when it comes to the banks. What are you looking forward to? So, absolutely. We hope that we address dealing with the run of the headline notes. It's AI and like all of us communities doing something able to favorite like or buy a fancy sweater. And so
I'm excited for the facts. And actually, the regulatory data is very promising. Direct lending to companies is up like 2.6 standard deviations above the seasonal average. The consumer, for now, crossing fingers and toes underneath this desk, still spending. And of course, capital markets is still booming. And so, you know, the market is going to see this as largely a little bit backward looking. And so it's really important for us to hear from the management, especially the juices, in terms of what they're seeing looking forward, and how we're seeing what these trends are.
The capital market strength has been pretty incredible. I mean, I remember having a conversation with Paul Kaufman at the outbreak of the war, who basically said it's time to put the pom poms away, that it might not be as robust. Instead, what we got was the best first quarter on record for M&A. I spoke to the heads of M&A at both Morgan Stanley and Goldman Sachs, who said it looks incredible. The pipeline looks good. Is there any reason to expect that that will change in banks' outlook, that we won't continue to have strength because we have, despite AI fears and war?
So I think we need to think about M&A and IPOs maybe a little bit separately, right? So it feels like in this current administration, there's like a very specific window for this sorts of things, right? Because you used to not be able to get like your handbag deal approved, right?
Oh yeah,
It's like, oh, monopoly on, mid handbags.
Michael Cole.
Yes, yes. And so it feels like that window matters more than the volatility. Now, the real question is that, clearly there are blockbuster IPOs that are being on the pipe. But what about the smaller ones? And now the funds are saying, valuation has come in. And so what's more important, timing or waiting up the valuation once again? I think that's actually, could quite be more interesting to ask about, but it does feel like M&A, that boom will continue despite all these headlines.
The other headline that's been ever present is just anything related to private credit has attracted a lot of eyeballs. And will there be any spillover from the stress that we're seeing? Again, whether it be stress just on the sentiment level or on the actual underlying asset itself.
So that's a great question. And I'm really excited for David Solomon and Jamie Dimon to kick this off because, I'm not going to use this opportunity to nerd out on the structure, but essentially,
You're going to do it somewhere.
So let me break it down to you like this. For the bank to lose the first dollar on these credits, you essentially have to lose, let's say, 40% equity first, right? And so the way they protected themselves in terms of essentially being very senior to the special purpose entity that holds the collateral or the pool of loans, and the way they've structured these credits essentially are, you have to burn through that equity first. And when you're hearing in the headlines that, banks are marking these loans, marking the value of the special purpose entity, they're actually behooving the fund to put in more equity, right? And so, I'm an equity gal, not a bond gal, but over collateralization is a technical thing, and that's the position that the banks are in. Now, Junior sets the tone, right? And in the third quarter, we did talk about pests. And his chairman's letter sort of set the tone in terms of what he thinks, the fault could be if we fall into recession. The question for him is, okay, well, that's all well and good, but what is the actual flowback to the banks? I think that's the important question, because then we could put to bed, the underlying fear that there's a systemic issue here. And by the way, we're coming upon this sort of an inflection point, these issues where the banks are coming in with so much capital, so much liquidity, plus the regulators are redefining excess capital and liquidity. And the very definition of systemic risk is if the banks pull away all that capacity away, and then you have a credit crunch. And I'm not sure that's the case right now.
One of the ways I've heard it described that it could theoretically be systemic is just that banks themselves lend to private credit players. And we've seen JP Morgan, for example, say, we're going to revalue what we think you're worth because of your software loans. Do you see a scenario where, one, there's spillover effects, or two, just simply that they decide to pull back from this area of lending because of those concerns?
Look, I think that there has certainly been a boom in these types of credits. But if you think about the brand name sponsors, right? they're going to be around forever, and they're your pipeline for a lot of other businesses other than, any non-depository financial institution lending. And so you're not going to say, hey, I'm going to pull back from, Aries and KKR, right? And so, I think there's always going to be, a reevaluation of, credit underwriting whenever something like this comes up. But I'm not sure that there's going to be that big of a pullback.
If we could just finish on the banks for next week, what's your top pick?
Ooh, actually, I'm going to be a little bit spicy. So we upgraded Morgan Stanley. I
An
mean,
uncertain world by quality.
well, look, I mean, Morgan,
Your words.
if everything is on sale, buy the Hermes Kelly. Right? It's just funny to me that, in this capital markets renaissance, Morgan Stanley has been left out of the conversation, arguably one of the best investment banks in the world. And also, I mean, it's just a juggernaut in the wealth management business. And it's gotten hit a little bit on these AI concerns. But Morgan Stanley has proven in its history that it's not afraid to disrupt itself. I mean, think about them buying E-Trade. So I think they're going to be, go in there and have a standout quarter and flex a little bit, remind everybody that, they're best in class.
Ted pick flexing next week, maybe. Great, Erica. Thank you so much for joining us, Erica Najarian of UBS. Coming up in the program, the latest round of CPI data is set to cross. Matt Lazzetti of Deutsche Bank will be here with us, breaking it all down. You don't want to miss that data. Coming up in just 5 minutes' time, you're watching Bloomberg Surveillance.
the volatile items. And I think for this print, it is important that rent and OER were stronger. That does tell you they're a little bit higher than we expected, maybe on a forward-looking basis. Those things tend to be a little bit more persistent. Used car prices were actually materially weaker than I think we were anticipating. You had the decline that Mike had noted. I think over the next several months, those should be picking up given what we see from wholesale prices. You did see airfares rose pretty strongly. Maybe that's reflecting a little bit of the rise in jet fuel prices as we look ahead. But overall, very strong headline print, core print weaker than expected. But we'll have to see over the next several months, probably get a pickup.
But this isn't the worst case scenario, is it?
No, I think for the Fed, you can look through a particular month, particularly driven by gas prices. I think more important for the Fed would be yesterday's print, which was core PCE. That is running at 3% year over year. It's a percentage point above their own target. Now they think that 50 to 75 basis points of that is from tariffs. But the starting point is just not good when you're overlaying another energy price shock on top of that.
So you have those two in hand. The market, Anne-Marie was just pointing this out to me, that you do have markets starting to price in more bets of a cut for something around 20% odds to get one by the end of this year. Given what you were just saying, is this a setup where you can get cuts?
So our baseline is that we will get a cut in the back half of the year, but kind of confidence in that has waned, I think, and the story and narrative to get there, I think, has changed. So coming into the year, we thought that we would see some meaningful disinflation over the back half of the year, core PCE falling below 2.5%, and with that, the Fed being able to cut rates, potentially as you get a more dovish reaction function under a Kevin Warsh-led Fed. We're not there yet, obviously. But I think our story has changed. Inflation is now too high. I think the probability that we get enough disinflation this year where the Fed cuts on an inflation story alone is less likely. And you likely need to see some weakness in the labor market to get the Fed to cut later this year. As we saw last Friday's jobs report, we don't see that weakness. You have a labor market that looks very resilient. The unemployment rate is actually declining a little bit. Payroll gains are picking up. And so I do think the market, yes, we're pressing a little bit of a cut, but the probability is pretty low at this point.
And this is where, and Lisa's talked about this a lot, where scenario analysis becomes kind of the only thing you can do, considering how big the left tail is. We're talking to Bob McNally, wrap it in earlier. He's saying one of the scenarios, not his base case, but one scenario is where you get a huge hit to growth because of higher energy prices, and you need to start talking about recession. For you, what is the level where that can come into the picture?
Yeah, I think the way that we think about oil prices is there is this strong historical parallel between oil price shocks and recessions. I think 9 out of the 11 recessions that we had after World War II were coincided with a meaningful oil price shock. But the structure of the economy has changed materially over the past 10 years. We're now a net energy exporter, record production that we're seeing. Households still take a hit, but households are buffered given the tax cuts that we see. So the price level that we are kind of worried about would be about $150 per barrel for oil. That would eliminate the benefits that households have from the Trump tax cuts. We're not there. And obviously we've moved away from those levels over the past week.
I just want to bring in Mike McKee for another moment. I know he's been digging into the data. Mike, what else are you seeing?
Well, we've got some interesting surprises and some not so surprising news. You look at airline fares, they were up 2.7%. Of course, the airlines raising prices to keep up with the fuel problem that they have, but it's also the season where they start to raise prices going forward for summer vacations. But some areas did not rise, and that is a bit of a surprise. Medical care services were pretty much flat, down 0.2 on the month after a series of big increases. We also see motor vehicle insurance flat on the month. That had been going down. So some offsetting moves in things that actually will show up in the PCE when we get to that later in the month. But overall, kind of, as Matt said, expected in terms of inflation, and we get the usual volatility in various individual categories. The question is, how strong is underlying inflation going forward? That's the Fed's job to figure out.
Right. So there are some really negative pockets, but Mike is pointing, even Matt, to some decent improvement when it comes to inflation in some scenarios. I guess the Fed could breathe somewhat of a sigh of relief because they knew the gasoline shock was going to be there.
Yeah, you knew the gasoline shock was going to be there. You got some weakness in medical care commodities, used car prices. I think the one thing is, as you look ahead, the fact that rent and OER are stronger is important. Those are very persistent components. They're a much larger share of CPI than they are PCE. But nonetheless, if those pick up, you build in a little bit more inflation as you look ahead. And then again, some of the weakness in used car prices, where we have pretty high confidence that over the next several months, those are going to bounce back given what we see from wholesale prices. The key question remains, how much pass through do you have from this oil and energy price shock to core components? The Fed's modeling on that reaches different conclusions. The Fed staff's model suggests that you have very little pass through to core inflation. They had some other modeling that they did after the 2022 oil price shock, which suggests that you get a more persistent pass through. So I think that's the key question for the Fed.
I still just go back and you're great on this, man. Just the setup. The setup wasn't great for this. That in PCE we saw this rise come before and this sticky inflation. If we couldn't get inflation down to target for the past 60 months, even before the outbreak of war and another energy shock, how do we even get there at this point?
Yeah, and I think that's the real issue for the Fed, right? Because even before this shock, the core PC inflation was still a percentage point above their target. We are now, 5-6 years into the initial inflation shock that we saw after COVID. Yes,
Good morning. This is Horizon Middle East and Africa. Our top stories this morning. Oil clearing gains with investors positioning ahead of high stakes US-Iran talks scheduled for Pakistan this weekend. But a new warning, President Trump threatening Tehran again for charging shipping fees in the Strait of Hormuz. And Israeli Prime Minister Benjamin Netanyahu is promising to keep fighting Iran-backed Hezbollah even after agreeing to talks with the Lebanese government. Well, it's just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai, gearing up for a key weekend of negotiations. Those direct negotiations between US and Iran are taking place in Islamabad. That has been confirmed. And I will say that there's a lot of cautiousness into this weekend. With the hopes of some form of a breakthrough pretty slim, but at the same time, it is positive and being treated as such by global markets that the two sides actually are getting together in person. So, as we think about the final trading day of the week, the handover from Asia has been moderately positive as well. We also saw a much better end to Wall Street once again yesterday. So, taking a look at the markets this morning, S&P futures not doing a whole lot, trading a little bit cautious, I would say, up about 5 basis points, but this would be their seventh day of gains. This is actually the S&P's biggest and longest winning streak since last October. So with everything that has gone down this week over here in the region, the ceasefire that has been implemented, that's obviously been cheered on by global equity investors. And what we are seeing is back-to-back gains for the S&P. Also keep an eye out on data that we have today as well. Don't forget about that. We've got US CPI coming up later this afternoon to watch out for after a whole bunch of data that dropped yesterday. We'll talk more about that on the show. Bit of a mixed bag there. European markets leading green as well, up 0.6%. And then Brent, we are sort of hovering around $96 still, up 0.2%. We've been at these levels a couple of days now, at least since the ceasefire was announced. And of note, of course, still is what is happening around the Strait of Hormuz and the fact that it is still effectively shut and being monitored by Iran. And then two-year yields at 3.78 this morning. We're up a couple of basis points. Here, just to flag that in terms of what is priced into the market as we head in to the remainder of this year, in the US, and this is interesting, about 4 or 5 basis points of rate cuts are priced in by the end of this year. That is in contrary to the European markets and UK markets that are pricing in around 2 hikes. So there's a clear disparity between how investors are pricing in the Fed's reaction function versus the ECB and Bank of England. Just something I wanted to point out there. Okay, let's drill a little bit deeper. Final trading day of the week. April Hong is standing by in Singapore for us. April, run us through some of these Asian markets.
Yeah, it's a Friday where we are seeing the green seeping through into Asia stocks. And of course, this is a region's benchmark, as you see at the bottom of the screen, that is headed for its worst or first weekly gain since February. So it's been quite a turnaround, a bit of a development.
CPI inflation data released this morning at 8:30 was higher. And that's, kind of obvious from all the gas prices going up from the Iran war. Right now, gold and Nasdaq are within the fair value.
Some of those inflation.
This is a seller zone, but aggressive buyers have stepped in. And we're trying to see if we can break this range out. See more conviction from the buyers for this to continue up from that news. 8:30 candle, which was a bull candle. But we're stuck in that range here. And there's the volume profile for that. Nasdaq is as well stuck in that range. Buyers have stepped in both gold and Nasdaq. See conviction with these buyers.
Inflation based on the PPI data.
War constant, right? Who's stronger? Who's our aggressive buyers willing to accept? If there's acceptance from aggressive buyers, and that'll push markets up. If the sell wall protects certain areas, levels, then it'll come back down. It's the puzzle we're trying to figure out. It's the day-to-day session basis.
Meanwhile, Israel's Prime Minister has agreed to hold direct talks with Lebanon as Trump says Benjamin Netanyahu was, quote, going to low-key it with strikes.
In light of Lebanon's repeated calls to open direct negotiations with Israel, I instructed the cabinet to open direct negotiations with Lebanon as soon as possible.
Joining us now is Stuart Livingstone Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia. Stuart, so the Islamabad talks are going ahead. What do we know? Who's attending? And what are the chances of a breakthrough?
Good morning, Jamal. So we don't really know the full extent of who's attending. Certainly from the US side, it's going to be the vice president along with Wickoff and Kushner. From the Iranian delegation, we're not entirely sure yet, although they were supposed to have arrived yesterday. Again, some.
So it looks like sellers have protected this level. This is the value level. The sellers have found, they came back and found value here, and now it's turning around again. Now price starts displacing lower and lower, and then aggressive sellers come in, and aggressive sellers get accepted. If aggressive sellers are accepting lower orders, then we can get conviction for shorts. But right now we're still range bound. And it's this getting entries into these value zones.
And let's not forget that in prior,
It's gonna be your best bet to
taken, multiple rounds is necessarily be conclusive. The one
it's just less stressful, and you can hold drawdowns better. But
that they are
actually you should really be sizing down. Otherwise, you're gonna blow accounts, like I've done plenty of times over the years.
They sort of wanted to include a Lebanon ceasefire in part of the broader regional package. What do we understand about the fifth instance from Israel? And is it fair to say that the Lebanon-Israel track perhaps is going to be a separate track to what is going to happen in Islamabad this weekend as well?
Yeah, I mean, it's a very good question. So we don't really know what happened. Our presumption, and it is a presumption, is that the US has been applying pressure on the Israeli Prime Minister to try and.
So price is constantly doing two things: seeking value, and once it finds its value, then it'll look for liquidity to get filled, to refuel and push more.
Which is to try and defang it a little to stop the cross-border fire. However, it must be said that all the rhetoric coming out of the Prime Minister in Israel and the government more widely is that this is an issue that now needs to be dealt with. And you've seen sort of quite a dramatic escalation in terms of the Israeli troop presence in southern Lebanon, and you've seen a dramatic escalation in the bombardment.
It looks like buyers have absorbed this seller here.
Why the ceasefire is taken into account, and it's not clear yet whether this is really a red line from Iran. In terms of
I do not know how to read order flow, so I'm using the poor man's version of it, with just, basically volume profile. I like the fixed range; it's my favorite, and I use delta, and I find volatility areas.
Also, Science and Associate Professor of Political Science at NYU Abu Dhabi. Adam, really good to chat to you. So, my colleague Stuart there, sort of setting the stage vis-a-vis the Islamabad discussions this weekend. Are you optimistic that we're going to get some form of a break deal?
This would have been a good buying opportunity, because at this level, this is a value level here that I've drawn out. Price respected.
On this.
Buyers are holding this, sellers held value up here, and now buyers are stepping back in.
Majority of their demands, and that just simply isn't the case. I think Pakistan was very clever in the way that it pitched.
I've basically been micro scalping NASDAQ the whole morning so far. We're still pre-open.
Either side to resume the conflict at this point, even though they are far apart in their initial bargaining position. The reality is, restarting the war would really draw the ire of the and I don't think either side wants to be
almost 400.
that
almost $400 here on just micro scalping Nasdaq.
And I think there are going to have to be.
Have not been able to trail any positions really this morning. Hopefully I'll get one. I just need one more solid setup to get my 1%.
I don't think the Iranians want to be viewed as the ones who walked away from the ceasefire negotiations. Risk of getting more countries involved in the conflict if things do escalate. If, on the other hand, the United States were to be the one that walked out,
Yeah.
I think that would play
Yeah.
right into the hands of the Iranian regime.
Need to learn how to read order flow.
Yeah, there's one new out.
I cannot afford it right now. Those charts cost money. So I'm using the TradingView's 4-man's free indicators.
An unacceptable outcome for nations in the region and around the world.
Punk ass bitch.
Would Iran project into the future?
Get money don't make money.
Exercising that sovereignty, or do they see this as a bargaining chip so that they can extract more economic concessions out of the US? What do you think the thinking is?
They're rejecting this level. I mean,
Sure, within the regime, there is a.
this is a seller's market.
I think the mainstream opinion is that it is largely a bargaining chip.
I missed my short here.
Had to do.
So this seller took out this bull. I mean, just took him out. That was it. That was the trade for me for the day to hit my 1%.
And get some tolls from the straits. But I think
30 ticks.
Partially a negotiating chip, but also I think it's also worth noting that I think that the ships that pass through Iranian waters.
The same here with Nasdaq got rejected at the POC.
The conflict.
Now price is trying to break away from value now. We're going to, if we go away from value,
No restrictions at this point. There would have to be significant demining operations in order to make it safe to use the entirety of the strait. So I think it's going to be some time before we see.
Sellers would have got wrecked here. But if you just could trail your position and move slow enough to trail here, you could break even. Stepping back in, but it's an inside bar candle. We don't know who's going to win this battle because we're still stuck in this range. Value range. We're in prices in value.
Of a broader deal with the United States.
This is a fair market right now. I mean, it's a balanced market. I mean, fair value gap's been mitigated. Bulls tried to come in balance here, but look, rebalanced. Now we're starting to see a little bit of imbalance because of these strong pushes. And if we can continue to push away from value, leaving imbalances, that's when you can get some really, that's when you get real conviction and strong moves. Few aggressive buyers stepping in now.
Government is over, and if that means at least bifurcating the conflict, maybe they continue to support Hezbollah indirectly in the future, but for now they just sort of bifurcate the conflicts and let Israel and Lebanon figure out.
I just missed Nasdaq right here, a buying opportunity. Nasdaq is lagging behind gold, but sometimes they move in opposite directions, so do not advise trying to trade any kind of correlation. That's a whole different type of headache that you don't want in your life. We're trying to minimize stress.
Associate Dean of Social Science and Associate Professor of Political Science at
These are massive buyers coming in. I mean, acceptance, buyers accepting.
How markets are positioning ahead of this week's
Speculation down, well, or just that absorption held. Sellers gonna absorb here, it held. Buyers protected this level. See if I can find a buy here on
Welcome back.
Nasdaq.
In Dubai. Investors are positioning ahead of a US-Iran ceasefire talk scheduled for this weekend. This has boosted the dollar as markets weigh the prospect of a lasting truce. Joining us now is Mahmoud Zaman, head of FX research at ANZ. How are you thinking about risk going into this weekend? And clearly,
Here we see value,
things could fall apart.
value high level.
Is one, then therefore
Is it respected? Are sellers going to protect their value levels? Right now, it doesn't look like it. Look at that. Every time sellers try to come step in, bulls, the buyers are stronger.
So much uncertainty out there. I think yes. At the end of the day, depending on how things progress, as the bottom line for us and for the dollar is really the reopening of Straits of Hormuz, oil supply coming back, and oil prices.
So it looks like
Lower.
these are just trap sellers here in this zone.
Into the next couple of months.
Yeah, and the thing about the USD is in the first month of this war, and it's really unbelievable that it's been 6 weeks now, but the first 4 weeks it actually benefited from safe haven status. The last couple of weeks it struggled a little bit. Why do you think that's the case?
I think, there are other things holding the dollar back. We can't forget that US policy uncertainty in 2025 particularly has been a key driver of USD weakness. Of course, the US economy also has its own challenges. For us, we are still expecting 3 Fed cuts to resume.
You want to maximize your RR levels at low volatility zones, like such here and here, and then using once volatility picks up again and using that as a take profit level. That's your best bet to really
Why do you think the
have
Fed
the most bang for your buck on setups.
here? The market is only priced
Because once volatility shows up,
at this point.
usually then you're too late into the position. Those are those are where the big boys are taking profits usually.
Inflation numbers, which we are actually going to see tonight.
Another entry here. So weak
Other driver
sellers, but
I think
buyers are weak buyers here too. 5 minutes until the open.
We actually don't think the Fed will hike. In fact, they will look through. Looking at previous oil shocks, we have seen that the pickup in headline inflation.
Sellers have just stepped in the Nasdaq, whereas gold is still bullish.
And when we think about oil prices as well,
A lot of sellers stuck with gold here.
shock. At the end of the day, you've got that supply shock
In
to play as well, and you see oil prices stabilize.
Nasdaq.
Yes, you could argue that the lower levels will be maybe higher than pre-conflict levels of oil, but surely not sustainable at, let's say, and so we think that
Jan's FX research head is projecting 3 Fed rate cuts ahead of for the next quarters here, 2026, which is going to be really hawkish.
Also Japan, I wanted to ask you about Japan. How do you think the Bank of Japan
Drive
react to this shock and the fact that Japan
metals and
stockpiles
equities can drive it up?
On there?
For sure. Markets.
The growth impact or the inflationary impact of this energy shock?
I think inflationary impact will be top of mind, but
I think a 25 basis point hike
of the energy
at the end of this month.
managed.
Looking forward to that.
Going forward, surely the big focus here is imported inflation is picking up. How is that going to impact the yen? The yen is again trading at levels where we have seen previous Fed rate checks or interventions. There's a lot of verbal intervention coming through. But at the end of
Every time I see these setups, it's always too late. By the time I see it, it's already. It's just the train is always leaving, and I'm still stuck at the freaking station here.
Yeah, we've got dollar yen at around 159 now. Where do you see it headed in the coming months?
Look, I think in the near term, we spoke about dollar strength. We might see a little bit of that from
We just wait for her to open and let calm down.
I think we do see a little bit of that weakness coming through in the yen, as long as we get that negative terms of trade shock playing through. But again, coming back to intervention, we don't think the intervention story or actual intervention will come into play anytime soon. We need to see disorderly behavior. We need to see speculative flows. And I think we need to differentiate whether the move up in dollar yen will come on the back of speculative flows, or is it really coming on the back of macro fundamentals like import costs and energy-driven inflation, which is the trend. And that's, justifying intervention for those reasons is a little bit more difficult.
Mahjabeen, always good to chat to you. Thank you so much for coming on. Mahjabeen Zaman, head of FX research at ANZ. We'll go ahead as global conflicts reshape markets. Some fund managers say Africa is starting to look like a safer bet. We'll discuss that later on the show. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versetti in Dubai. According to Saudi Arabia's state media, an attack on its east-west pipeline this week has cut throughput by about 700,000 barrels a day earlier this week. Now, the strikes also hit major refining facilities, disrupting exports of refined products to global markets. Officials say the attacks have reduced Saudi production capacity by roughly 600,000 barrels a day, according to concerns, adding to concerns over global energy supply. India's oil minister is heading to Qatar as New Delhi looks to secure faster gas supplies after weeks of disruption. He's expected to press for priority deliveries of LNG and cooking fuel as the country grapples with shortages and rising prices following the Iran war. Qatar is India's largest supplier of liquefied natural gas, LNG, and the visit comes as a tentative ceasefire raises hopes for a gradual resumption of energy flows. Kuwait's National Guard says one of its sites was attacked by drones, resulting in severe damage without causing injuries. Meanwhile, the UAE Defense Ministry says the country's airspace has been free of any air threats during past hours, and its defenses did not detect any drone ballistic missiles or cruise missiles launched from Iran. And a quick look at yesterday's close for local markets. This has been the price action. A positive day with Tel Aviv back online again after a holiday up 2.6% to Davos.
Nasdaq up, go down.
A bit of selling pressure, 1.5% weak from the Egyptian stock exchange, up 1%. Coming up, Israel's Prime Minister Benjamin Netanyahu agrees to hold talks with Lebanon, but vows to keep fighting Hezbollah.
Now Nasdaq hit its standard deviation, is trying to come back down.
Good morning. This is Horizons Middle East and Africa. Our top stories this morning.
Way up.
With investors positioning ahead of high-stakes U.S.-Iran talks scheduled for Pakistan this weekend. Got a new warning. President Trump threatening Tehran again for charging shipping fees in the Strait of Hormuz. And Israeli Prime Minister Benjamin Netanyahu is promising to keep fighting Iran-backed Hezbollah even after agreeing to talks with the Lebanese government. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Well, the markets have two eyes. One eye is going to be on the discussions taking place in Pakistan this weekend. The other eye is going to be on the U.S. data that's coming through this afternoon. We have CPI data, and of course, we did have a huge amount of data dropping yesterday.
It was a weak seller. The seller right here looks really weak. Absorption here. Absorption does not necessarily mean reversal either. We have to find acceptance. The only way it can reverse is if aggressive buyers are accepting prices to go higher.
This week,
it's getting rejected. It's true. Buyers trying to step in, but they're getting rejected. That value area again.
To the US, and that is continuing as we head into the weekend. Though I would bit of cautious optimism there. European markets seen opening up about 0.7%.
Sellers step back in here.
So we're still about $25. before the war started, and that was 6 weeks ago, if you can believe it. But still some upward pressure. We'll talk about this.
Some strong buyers coming in, aggressive, heavy buyers.
I think in the US, 2 basis points higher. As we were speaking about earlier, they're about 4 or 5 basis points rate cut priced in for.
Won that battle. So weak sellers here, the buyers try to step in, and then stronger sellers came in. Take this out. We can look for a short here. Where is my entry?
Right, that's high.
I can't do a drawdown, please. No drawdown. I just wish I knew.
But take a look at what you're seeing this Friday. We are set for the first.
That was an entry. A wick, one of these wicks.
So it's been quite a turnaround to your point. And I think investors were now watching those developments, especially into the weekend with those talks between the US and Iran as well. And perhaps the optimism that maybe that traffic through the strait can creep back up again. So that maybe is helping to ease some of these inflation worries. You are seeing the Nikkei adding on to the gains from earlier on in the session. It is outpacing what we're seeing even on the South Korean gauge now, which of course amid the war has been seen as a sort of barometer for risk appetite for AI optimism. And given how the BOK, yes, it has been significant.
Volatility has picked back up on NASDAQ, but not quite yet on gold.
So maybe this
should be expecting it soon.
Banks in the region is also another positive indicator. But as I say, we're also looking towards the weekend talks. Jumana?
April, thanks so much. April Hong in Singapore. Now, shipping across the Strait of Hormuz remains heavily restricted, with transits over the past 24 hours consisting exclusively of Iran-linked cargoes. For more, let's bring in Bloomberg's oil shipping reporter Wayland Soon in Singapore, who's been tracking and monitoring the activity around the straits.
This wick is a good entry.
Of the Strait of Hormuz.
Just like NASDAQ, you can find wicks. Those are the best entries.
It's still pretty much.
Why? The prices love. It's like a magnet. It just gravitates towards these wicks. It's just that's just liquidity at these wicks. That's all it is. It's like fuel stations.
And also Japan linked ones, sailing closer to the Strait of Hormuz but not attempting to escape. So what this tells us is there's a perceived lower level of risk, perhaps, but details are still very unclear. Ship owners are still very worried that there might be attacks if they do try to sail through. We have gotten a recording of one of the
sellers protecting. This is a seller's market.
Pretty much in control. And want to decide on which.
Oh wow! Look at the manipulation on NASDAQ. Buyers got trapped so hard up here on buy side liquidity. Took the liquidity. It grabbed liquidity from the CPI release, that high that it created. It grabbed that liquidity and now it's just puking, going all the way back down where it should. Lower lows here.
The fees for ships passing through, and have they set aside specific waterways for Iran-friendly ships versus non-friendly ships?
Right. So before the ceasefire, we've already reported on how Iran is actually starting up a toll booth of sorts that goes through the two islands, Kashem and Larak, that sits at the tip of Hormuz. So ships would have to sail through this water channel to the secure safe passage. And part of that would also entail paying a toll fee. Whether this applies to all ships, we don't know for sure, but we have heard of some governments being in talks with Tehran to have the ships sail through for free. But now, after the ceasefire, the Iranians have come up with a new plan that detail how ships can go through in and out Hormuz. And those two passageways do go around Larak Island. How that is being enforced, we're still in day 3 as of now. But it seems like nothing much has changed, that Tehran still wants to have a lot of control over the strait.
Interesting. Okay. Bloomberg oil and shipping reporter Raylan Sun with an update on the strait. Well, tentative signs of de-escalation with Israel agreeing to hold talks with Lebanon.
Still holding strong on Nasdaq as well. It's just a swing, heavy swing on Nasdaq.
Negotiations, with the talks focusing on disarming Hezbollah and reaching a sustainable peace agreement. Joining us now to discuss is Mark Siebert, former U.S.
Stuck again here in gold.
Have you with us on the show? And I should say that a post that you put up on X earlier this week went viral, and your first comment was Iran has blinked because they've accepted the ceasefire. You could argue that both sides have blinked here. Why, in your view, is it Iran that actually were the first to blink?
Well, let's be fair to me. I put that up right after the announcement by the Pakistani foreign minister that there would be this ceasefire in the beginning of direct negotiations in Islamabad starting this weekend. Iran had previously stated that it would not accept a temporary ceasefire, only a total cessation of hostilities. And President Trump later made the ceasefire contingent on the opening of the Strait of Hormuz, which, as you have just reported, has not happened yet. So the whole edifice is shaky. That was my initial reaction. I think now we have to see what comes out of the talks in Islamabad. I am fairly confident that the United States will not accept the arrangement that Iran has put into place for Hormuz traffic. That's a hijacking of an international waterway, and it obviously serves the Iranian narrative that they've come out of this war in a position of stronger leverage over the international energy markets. That is unacceptable, I think, but I can't speak for the American negotiating team, and we'll have to see what happens.
Yeah. What do you think would be an acceptable outcome from the US's perspectives from these talks?
I think that an acceptable outcome is probably close to Iranian capitulation, and I don't know that we'll get there without further use of military force, but it would be the extraction of the highly enriched uranium that's still in Iranian control, Iranian territory. I'm not sure. I mean, obviously, we would want a commitment by Iran on no enrichment of uranium. But I'm not sure their commitments are worth very much. And absolutely the full opening of the Strait of Hormuz, those are the basic demands, and we'll see.
Yeah, I mean, you just said now that it's unlikely that Iran are going to capitulate in the absence of further military escalation. Do you see a scope for that actually happening? I mean, we know, and we've been reporting, that there's been a significant amount of extra deployment of U.S. military assets to the region. Is there a chance that this ceasefire breaks and we once again see military operations intensify?
Yeah, absolutely. There's a chance. It depends again on what happens in the negotiations. The track record of the second term Trump administration negotiating with Iran is not terribly encouraging, but we'll see. And if the Iranian side feels that they have the upper hand, then I think there's no way to reach an agreement at this point.
Okay. What about the Hezbollah track and what has been going on in Lebanon? Big announcements yesterday from the Israeli Prime Minister that the Israelis are willing to start direct negotiations with the Lebanese government. Do you think there is an attempt to separate the two issues from each other?
Well, look, from the point of view of the United States and certainly the point of view of Israel, there is no direct connection between Lebanon and the conflict with Iran. The Pakistani foreign minister's initial statement said that the ceasefire applied to all fronts, implying Lebanon. That's been denied by both the United States and by Israel, that there's any linkage agreed to. But yet the fact is that the regional environment is clearly affected by conflict on the opposite end of the spectrum. And I would note, I think Israel has a longstanding willingness to engage the Lebanese government. The new element is apparently the Lebanese government has offered to have direct negotiations with Israel under an American umbrella, I assume in Washington.
Yeah, I will just say the Lebanese government have been saying that for a while, that the last couple of months they've been wanting to have these direct negotiations. Do you see then, looking ahead, a possibility that the Iran side of things calms down, but we still get an active front with Hezbollah from Israeli perspective? Or if the temperature dies down in the region more broadly, are we going to see a de-escalation in Lebanon too?
It's hard to say. I think most likely we'll see a de-escalation in Lebanon as well if the Iran front calms down. It depends to some extent on what Hezbollah does. The purpose of the Israeli operation in southern Lebanon and then the latest airstrikes on parts of Beirut was to remove the threat of Hezbollah attacks on the communities in northern Israel. I visited there last fall. Many of those cities were evacuated for 2 years after October 7th, 2023. They have gradually been repopulating. And I think the Israeli government's intent is to ensure that the residents who come back to that beautiful part of northern Israel feel safe from attack from the north. And there's also a commitment by the Lebanese government to disarm Hezbollah, which I think we all know they have not been able to achieve, but that's certainly a key goal.
Yeah, and I should just say that Wednesday did actually constitute the deadliest single day of attacks since the war erupted, with the Lebanese Health Ministry now putting the number of people killed at 303 and 1,150 wounded. So we'll see how this all develops. Mark Sievers, former U.S. ambassador to Oman, thank you so much. Well, coming up, as UK Prime Minister Keir Starmer ramps up his rhetoric against Trump, we'll look at the purpose of his Gulf tour. We'll have details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. UK Prime Minister Keir Starmer said President Trump's rhetoric this week, threatening to destroy Iran's civilization, does not fit with British values. Starmer spoke in Bahrain during his tour of the region to shore up relations with Gulf partners. For more, we're joined now by Bloomberg's James Wolcock. And of course, the UK Prime Minister has visited a bunch of Gulf countries, not just Bahrain, but Qatar, UAE, and Saudi Arabia as well. What was the purpose of this tour?
Well, he and other European leaders weren't involved in the planning of this war and haven't been involved in any aggressive attacks on Iran, but they want to have a voice, and they have seized on this ceasefire as a window to try and wield soft power. As you said, the UK Prime Minister has been to Saudi Arabia, Bahrain, the UAE, and he has called President Trump overnight to update him on what the plans for diplomacy are. This is Bloomberg has reported in the past 24 hours that NATO allies were asked by the US to present their alternatives for how they would reopen the straits. So, Jemana, what he's trying to do, Keir Starmer, is he's trying to say to the US, here's how we would do things, here is what a diplomatic solution would look like. And it is notable, it is different to the US and Israel's approach. And to look at that, look at both Starmer and France President Emmanuel Macron's comments about Lebanon and Israel, where they have both strongly condemned Israel's approach and say that Israel needs to stop attacking Lebanon. And they make no bare bones about that. The time of them being nice and charming to the US seems to be, at least for the moment, at an end.
Okay, so pushing the diplomatic channels over here in the region, how is the war though resonating for Starmer back home, especially with consumers facing the real high likelihood now of much higher and more expensive energy bills?
I think to understand this, you have to bear in mind two historical precedents. One is the Iraq War, which did for Tony Blair, the famous Labour Prime Minister, which everyone in Labour Party now looks at and goes, let's not have a repeat of that. The other is Liz Truss. The prelude to the Liz Truss bond crisis in 2022 was the Ukraine energy shock. So again, Starmer's administration is looking at these rising energy prices, which current forecasts say could add a whole percentage point to UK inflation, and saying, how will this impact our administration? Now, look, Starmer is the European leader who was closest to Trump in terms of trying to be the top charmer. He was outpaced only by NATO's boss, Mark Rutte, in being nice to the US president. That famous moment with a letter handing him over, inviting him to a royal visit. I say this to make this next quote from the interview Starmer gave last night sort of really put in context. Starmer said, I'm fed up with the fact families across the UK see their bills go up and down on energy, businesses' bills going up and down because of the actions of Putin and Trump. If you had told me, Jemana, that a year ago, the UK Prime Minister would be drawing a parallel between Russia's Vladimir Putin and US President Donald Trump, and implicitly saying that Ukraine and Iran are both the fault of these foreign leaders imposing costs on the UK, I would have been astonished. But that is showing the real rift in the rhetoric between the US and UK leaders right now.
Yeah, certainly noteworthy comments there. Bloomberg's James Wilcock, thank you for bringing us the latest on your Starmer's trip around the region. Well, coming up, as global conflicts reshape markets, some fund managers say Africa is starting to look like a safer bet. We'll discuss that next. This is Bloomberg.
At Food Lion, I get MVP savings on apples, strawberries, and blueberries. Me too. Oh, I don't think that's the same thing. What do you mean? Pies. They're fresh. They're pies. Really fresh.
With Canva AI, you'll never design alone again. Just tag it Canva for instant design feedback and suggestions, all from within the editor, so you won't break your workflow. Enjoy creative confidence with Canva AI. Try it today.
Choosing where to pursue your master's in IT and management starts with what matters most. Outstanding reputation, innovative concentrations like generative AI for business, affordable.
More news at 10. 10 more minutes here.
Welcome back to Horizons Middle East and Africa. I'm Duana Versace in Dubai. The war in the Middle East is reshaping how investors assess risk, with some turning more positive on Africa. A credit fund manager says global conflicts are challenging long-held perceptions as African assets deliver strong returns and attract renewed interest despite ongoing risks. For more, we're now joined by Bloomberg's Tiwa Adebayo. Tiwa, really good to have you on. I know you've been speaking to a whole bunch of credit fund managers. What is the view on investing in the African winter right now, especially in a world where there are so many geopolitical uncertainties?
So to put it simply, they're very bullish on Africa. They don't really think anything has materially changed. But what they are saying is that we're seeing volatility, conflict around the world, and comparatively, it makes Africa look like a pretty good place to invest. A lot of people speak about this sort of long-held idea of the prejudice premium, particularly when talking about emerging markets and definitely in Africa. This is something that people like Zain Latif from TLG Capital are saying is diminishing as you look across the world and you see there's more risk. Perhaps these notions that we've had about Africa for a long time in terms of rule of law, in terms of security, maybe that's not that different to the rest of the world. And that's the narrative that a lot of people have been telling me, speaking about this.
Yeah, you spoke to a credit manager like TLG. I mean, where are they actually seeing the investment opportunity right now? Where do they want to get exposure?
So Zain's been invested in Africa for over 16 years. TLG specializes in sub-Saharan Africa. And really at the moment, what he's telling me is that Africa is a growth story, really big on the human capital point, particularly as Africa has one of the youngest populations in the world, and the average age is
There's Michael scalping there.
on
Standard deviations.
the tech sector, particularly as it's focused on fintech as well. But in terms of what is the main driver in Africa, also he's focused on markets like Nigeria. We've got a great story on the terminal about where you should invest 100 million naira. Nigeria's stock market is one of the best performers globally. And so there are businesses there that could prove to be a great opportunity.
Yeah, especially with the reform momentum in Nigeria. Tiwa Adebayo, thank you so much. Really good to have you on the show. Okay, let's round up the week. Well, it feels like a really long week, even though it's a 4-day week. Let's take a look at how equity markets are faring as we head into crucial discussions between Iran and U.S. delegations this weekend in Pakistan. S&P futures now not doing a whole bunch, so we're shifting back to flat, but essentially we're trading more positive earlier in the session. And if you look at yesterday's price action, we've had actually back-to-back gains for 7 days now for U.S. equities. The ceasefire was very welcome and very well received by investors globally in all of these stock markets. Nasdaq also leaning towards the green as well. This after better close yesterday, closing up 0.8% higher. European markets, take a look there, up 0.6%, but you could say that perhaps it's a little bit of a catch-up.
Value area for Nasdaq. No volatility. It's the open for gold.
Leg up
Just,
these U.S. equity markets.
I mean,
Oil, which is what
both gold and Nasdaq are range bound, but
we still have Brent sitting at around $96.50. So this is the mood board today. We're up around 0.6%. WPI also up around 0.4% this morning too. And investors cautious. Really, there is some edginess as we head into the weekend. Remember, for all investors, it's not just about a breakthrough in discussions, but also this is around the future of the Strait of Hormuz. Will we get a breakthrough there as well? And will Iran?
it's this buying opportunity.
Sovereignty over the strait. One of the big questions.
Weaker
That was it for our show.
sellers got such weak sellers right here.
No matter what you drive, there's only one guarantee. It's gonna break down. I had a sensor light up on my dashboard.
There was a pop.
London, this has been Back Daybreak Europe. I'm Lizzie Burden with your top stories. Oil holding gains and global stocks rising ahead of high-stakes US-Iran talks scheduled for Pakistan this weekend. But President Trump threatens Tehran again for charging shipping fees in the Strait of Hormuz. This as Israel says it'll
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. It's been another volatile week with remarkable news flow. In just a moment, we'll discuss concerns over Anthropic from the U.S. government and the Fed with Charlie Wells. We'll also discuss markets and supply shocks with Emmanuel Kuhl from Barclays and Bloomberg's Liesl Hill. But first, President Trump says he's very optimistic about a deal with Iran before later threatening Tehran over charging fees in the Strait of Hormuz. Now, the continued closure of the waterway plus continued fighting in the region is really threatening to derail high-stakes peace talks this weekend. Well, joining us now is Honor Arndt, Bloomberg's managing editor for the Middle East and Africa. Honor, thank you for joining us. So the U.S. president is really putting pressure on both Tehran and Israel. What is the state of the ceasefire now?
The ceasefire is largely holding. There were some notable exceptions, especially yesterday and overnight in Kuwait, where the government said some of the vital facilities came under attacks. That was later disputed by the IRGC in Iran, which said it did not attack any country during the ceasefire, which possibly means that some of the Iran-aligned groups in the region, possibly in Iraq, may have attacked Kuwait. Otherwise, we are seeing a continuation of attacks, exchange of fire between Israel and Hezbollah in Lebanon, including this morning when air sirens sounded across Israel after what Hezbollah said was a barrage of missiles and rockets into Israel. Otherwise, I think the ceasefire is holding in much of the Persian Gulf.
Honor, what are the chances of a breakthrough out of these talks in Islamabad tomorrow?
Hard to tell, given at least there are two areas of contention between the parties. One, obviously, is Hormuz. It still remains pretty much blocked. Only a fraction of what used to go through the Strait is going through since the ceasefire began. And the other important issue, obviously, is Lebanon. Both Pakistan, the key mediator in this accord, and Iran said that they think the ceasefire does and should extend to Lebanon. But that has been disputed by the US and Israel, and that seems to be a key area of concern for Iran going into the talks in Islamabad on Saturday, Frank.
Honor, thanks so much. As always, Honor Unt, there, Bloomberg's managing editor for the Middle East and Africa. Now, Bloomberg has also learned that the Treasury Secretary Scott Bessent and Secretary Jay Powell summoned Wall Street leaders to an urgent meeting on concerns that the latest AI model from Anthropic will usher in an era of greater cyber risk. Well, our Charlie Wells joins us now. So, Charlie, this is a very big and important story.
Waiting for the last news release of the day here before looking for another
Stands out here is the
trade setup.
and the piece of this meeting, because this really
Michigan
is
consumer sentiment.
summoning the most
Confidence of
talk about what sounds like it could be one of the most
retail
powerful AI models
folks
to be released. This is not, a regulator talking to an IT guy, and this is coming just bank earnings season. We're expected to see banks talk about AI, and this was previously unreported. And so I think this really represents a shift, kind of from some of the optimism we've seen about AI to increasing fear.
So, Charlie, what do we know? Why are they so concerned about Mythos?
Well, look, Anthropic said in its release on Tuesday of Mythos that, this is a system that could exploit vulnerabilities of any operating system, of any web browser. And the real fear here is that bad actors, criminals, state-backed hackers could exploit some of these systemically important banks. So these are the biggest banks on Wall Street, the biggest banks in the world. If bad actors can exploit their vulnerabilities, that could destabilize the financial system. So that is really the issue at hand here.
Charlie, thanks so much. As always, Charlie Wells there with the very latest, of course.
looks like it's been released. Let's see what we got going on.
And oil slumping can be cemented.
There it is. 10 o'clock. Let's see. Michigan. No confidence. Lower confidence to consumers.
Is very, I mean, I don't know if it's relaxed, but certainly there's not much of a loss since we started the year on, despite the war and despite all the concerns, even with AI. Like, what is the market looking at today?
Morning, Francine. Look, I think the market is looking at the graph being two-thirds full pretty much, right? So we had a very powerful short squeeze on Tuesday, and basically the market has already recovered two-thirds of its war losses in a matter of days, right? So I think the market is very much buying into the trend food. The market never really capitulated in the first place because the view was, we cannot afford to recrash the market and to crash the US economy. So I think the market was hopeful for some kind of de-escalation. I think this de-escalation bias has been reinforced by this ceasefire, right? So I guess now market needs confirmation that we're going to get towards some kind of final resolution, which could basically contain the long-term impact of this conflict on the growth outlook, right? If it is a 1 month issue, I think the market will look through that. Now, if we have more lasting scars from this, that will result in weaker growth and higher inflation.
Nasdaq is puking.
I think the question mark whether the market is getting maybe too.
Nasdaq has left its value area. So now it's seeking liquidity because it's already found fair value. Now it's looking for those limit orders.
I mean, what is there to be really optimistic about today in European equities?
Look, I still believe that the case for equities to go back to the highs in a straight line is not that strong because you are still left with a suboptimal growth policy trade-off compared to what you had before the war. So as it stands, growth will be lower, inflation is higher, and I think ECB has a very complex conundrum to deal with because we do think they will have to hike rate if oil stays high. So I think to me, it's very much about how quickly oil prices can normalize. And I guess if the end game of this conflict is a much more sustained unwind of this oil risk premium and maybe a more stable region in the Middle East, which is still a possibility, that might be a win for the market and the global economy over the long run. But I think that seems to be not the most likely scenario here. So I would say right now it's very much positioning, driving the action, but significantly risking into this, from CPI, from systemic funds, hence this
Gold is attempting to leave value area here. Whenever there's fear in the markets, people tend to put more money into gold and hard assets.
Given that the US should have less of a lasting impact from this war on its growth and policy mix.
Emmanuel, before we get on to energy prices, what's your take on AI? Again, Anthropic and Mythos is now could be a cause of concern, which a lot of people knew, but I find it quite remarkable that you now have a high-level meeting with, the head of the Fed, the Treasury Secretary, calling in all the Wall Street banks.
I mean, we know AI will be a major source of disruption for economies, societies, and markets. I think the markets are quite aware of that already. We see massive discussion between winners and losers and all of that. I think there's a question mark about what policymakers and governments will do to manage this fast-moving disruption, right? Whether it's about cybersecurity, whether it's about impact on the job market, etc. And I think there's a question whether the regulatory backdrop around AI will evolve and tighten to some extent, right? So this is there's going to be a lot of moving parts, but what is interesting is that if you look at the US equity market, for example, it's been hit somewhat by this tech.
NASDAQ is very weak.
Forecasts are very, very strong. Now the market is starting to apply a higher risk premium to tech and big tech and AI players because there's a question mark on how much they'll be able to monetize all this innovation and disruption, and whether at some point you could see some regulatory backlash that start to impact the earnings trajectory over the long run.
Emmanuel, let me also bring in Liesel, who's managing editor for energy and commodities for Bloomberg here in the EMEA. Your team has done a terrific work actually in trying to bring all the stories on fertilizer, on food prices.
That's all we can get today. I mean, we got 1% gains just from micro scalping. Little break evens here and there. Didn't really find. I mean, this is a tough market to trade at this range here. Just what markets will do. Markets are highly efficient, so 70% of the time it's going to do this choppy mess. Trying to find clean setups is
physical market, the availability of energy to the world. Nothing's really
have fun with that.
We're moving through this yesterday.
Happy Friday. Enjoy the weekend. And safe from these volatile markets.
As a result of that, the physical, when